The following is a presentation of TFNN. It is now time for the Tiger Technician Hour with your host, Basil Chapman.
Hi everyone, Basil Chapman, Tiger Technicians Hour, and pleasure to be on the 16th of October. Most important session because, of course, we waiting with bated breath, I guess, to find out what's going on in Washington. But the market is saying, who cares? The Dow is up 200 points at 15,367. The S&P is up 20 at 1718. The comp index is up 44 at 3838. Gold is down $2 at 1271. Silver is up just a tad at 19 cents at 21.21. 1271 was the gold, and 21.21 is silver. Platinum's up 3. High-grade copper is down again. It's at 330, down 60 cents. Crude oil is around the 101, 102 area. And bonds are down only 8.30 seconds, and the dollar is up 20 cents, and the euro is down. It's really important to go through a couple of things here. When I'm looking at the various indices, yesterday there was a question as to whether the QQQ, that is the power shares, the power trust series of the NASDAQ Index 100, the 120-minute chart had made a phantom peak, or it was really a peak C, and we expected a peak D. What I do in a case like this is I look at the MACD, the fast-moving average, and I say that fast-moving average is still showing signs of strength. And if there is another leg up above the 90, what was it, 80.11 area, that would be the regular D. And that's exactly what we got as it walks the 9-period moving average. Technicals are still good. Actually, the stochastic's only at 82%, but it definitely is improving. And as far as the Qs are concerned, we're looking at the price bumping right in the weekly chart, right to that resistance area, that long-term trend line in the weekly. The monthly chart is already broken above it, so that's almost redundant now. I'm probably going to have to take that line away, although it now becomes extremely strong support. Now, let's just go through this. If this is a brand new leg A to the upside, that is very bullish. Why? Because in the chart wave methodology, what we're looking for is we're looking for peaks, successively higher peaks, label them with uppercase letters, A, B, C, D, alphabetically. And if this is the case, if this is just A, we should anticipate there's still going to be a leg B, peak B, a leg C, then a peak C, a leg D at least, and then a peak D. So in that context, we won't know for sure, but having gone to 88, almost 89% in the stochastic in the daily chart, and with the MACD just crossing positive now, it does suggest that the bias is to the upside. So how does it put us in the context of other indexes? The Dow is in leg B, and I still call it a gray B. It's not a negative. It is just merely an explanatory. It's a way of saying that the previous high, 15,709, was so much higher up that until it really decisively breaks that, or it goes to C and then starts at D, I cannot consider that it is a buy signal to a buy mode. I couldn't until probably how we close today. Because if we close really strong and tomorrow there's no break underneath the 15,174 low and 9-period exponential moving average support of today, that's going to suggest that we actually have a buy signal to buy mode. And then what we're looking at is we're looking at the third cup-shaped formation in the weekly chart. So if you're looking at this and you're saying, oh, okay, where do we stand? My contention has been that we're in a major bull market, a mega bull market, that should go to about 2012, 2014, when a whole bunch of things come into play. That doesn't say how high we can go, although I do have certain ways of looking at the height. But more importantly, it says that in this month of October, the weekly chart and the monthly chart of the stochastics of the weekly and the monthly in the Dow are lagging badly, and they need to fly. They need to really get going to show strength. So it says the Dow is, I wouldn't say the weakest link here, because the NYA.X, the NYA, oops, what did I just do? NYA.X, there it is, still has to make that leg D in the daily chart above 9906.32. And the way I've got this, a new high above that previous high of in the monthly chart, the weekly chart of 9906, it says that I would have to count that as leg C. There's no other way that I can count it, and that's really bullish looking out for the New York Stock Exchange. Okay, putting that into the context of what we have right now, I've said let's make it as simple as possible. And if you look at this particular index right here, the volatility index, it is down below 16. It's at 15.47, about to test the 1520s, I think that is. Let me just double check. 1520s, 200 period exponential moving average. Now, the day is young. We know that in this particular circumstance, you really have to be aware that politics can intervene at any point. And because it can intervene at any point, it means that as long as you keep going higher, and this is what I love about markets, as long as the Dow and the S&P, let's go to the S&P right now, as long as these moves, this is still a single leg A up in the S&P, and as long as these moves are coordinating, what we can say is that in waiting for the other shoe to drop, if it's going to drop, from the low of 1646.7, let me just, 1646.47. The low, I'm going to make that green because the stochastic's at 90%. So far, that's very, very good. In the S&P, you've got 1721. You've got some 60 points. Right now, you've got 60 points. That's like 700 or 800 Dow points to smash to the downside if there's sudden bad news. And that's what I really like. When a market, and I remember when we used to wait for the Fed announcement at, 2:15 on a Wednesday, and then the market would rally into that. And what I would think is great, it rallies into it, meaning that if there's a disappointment, the 80 points that it's just rallied, if it gives back 130 points, it's way better than dropping and then taking off that 130. That's really bearish. In this particular case, what it's doing is it's saying, hey, I believe that I'm going to anticipate correctly, therefore I'm rallying. And as Peaky in the Den says, they're panicking out, and Zita also says money is panicking out of money market funds. Yeah, they're panicking out of bonds and panicking out of money market funds, and they're putting the cash in. That doesn't mean to say we aren't very close to some kind of a top. But what I'm looking at here is, and this is what I told my subscribers, I said in my opening call, which is my daily service, a very comprehensive look at the markets every single day. These are some of the charts that you can see, just a partial look. Here's the Dow chart explaining exactly what we're looking at. If there's any moment for a deal, leg B could well begin, and there it is, leg B. And it's about to bump into the left side resistance of 15,387. The Dow right now is at 15,372. There was a left side right. Oh, my goodness, look at that. Exactly to the day. The left side, right side price. I forgot all about that. I'd drawn it in. Look, there it is. Left side, LS, to the midpoint that I chose. Right side. And right there, that's the end of the bond. And that's exactly where we're going. So all you can do is do your homework, number one. Number two is that within the context of doing your homework, in a case like this, I decided that we would be long certain stocks, which seem to be holding very well, and we would be short. We got taken out of short. One of the shorts was for 2% loss. I just haven't been able to work out. I don't remember what the other one is. Something like that, maybe a little less. And what we're looking at is we're left now free and clear, because if there is going to be a turnaround today, and it looks like, and it starts to look like we've given back 3/4 of the gain. In other words, the Dow's up 200. By the end of the day, we're only up 50 points. We're actually down. And then that negativity follows through to tomorrow. It says this is the time to assess whether you want to be adding to positions, starting your positions, looking at this as a buying opportunity, or, depending on certain circumstances, saying, I've got my stops in for our longs. Let's see how that lasts. Let's see how it holds up. And then let's deal with the situation fresh. And I think holding some cash here is very good. Now, what I wanted to finish my sentence from the other day, when I said a good friend suddenly turned around and said to the people at this particular table we're at, just at a friend's having dinner, maybe there were about 12 people, maybe even a little more, I'm not sure. And I've sold everything. That was Friday a week ago. And that was a fantastic move, because the market then dropped over 400 points. And my thinking was at the time, and then I said it to her, I said, I would have sold some, but I don't know about everything, because how do you get back in if it's market rallies? And that's the question here. So let's just say you sold at, the Dow went down to 14,000, what was it, 700 something? 14,719. And you sold at 15,100. And now you are at 15,364. And let's just imagine for a moment that into Friday or early next week, everything's resolved. Now you've got a market that has some sense of normality. So there should be a flurry of activity to the upside. What do you do if you're out of everything? How do you get back in at higher prices and feel that the risk reward was worth it? And that's the big thing. In fact, we're talking, emailing with someone earlier on. The issue really is exiting has been easy. You could just get out anytime. It is getting back in. How many times have I regretted so many of those stocks that we took profits in, and then I couldn't get back in, or I didn't get back in? Hey, look at Dunkin' Donuts, one of my favorites. And I still haven't got back. It made some money and never got back in. And I keep talking about this as a long-term buy and hold. And there it is at all-time highs, right almost as we speak. And what do? Is this leg E, peak E, or is it brand new B, and this should go to C and D? Are we going to the upper track? Those are the questions. Those are very big questions for both investors and for the layperson. I'll be right back. We'll try to deal with it. I'll be right back straight after these messages. Very important messages.
You take a hands-on approach to managing your investment strategy. You're always looking for the next trading opportunity to magnify your perspective. Direction Shares connects sophisticated traders with a powerful array of ETFs from a wide range of asset classes. The markets may go up and down, and you want tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor, Foresight Fund Services, LLC.
with the launch of Tiger TV. TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, David White, Larry Pesavento, Andy Hecht, Victor Jones, or Terrell Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
The Art of Timing the Trade Charts is the only software package available with a built-in Gartley and Butterfly pattern scanner that will scan thousands of stocks, ETFs, and indices each day to find these patterns and then make them available to you with just a single click of your mouse. Tom O'Brien and Dave White will be hosting a live event for all Art of Timing the Trade Chart subscribers on October 16th at 6:30 p.m. Eastern. And for a limited time, we're offering a promotion where new signups can gain access to this powerful charting software, as well as the live study session workshop coming up this Wednesday night for only $1. That's right, $1 for the whole month with the class included. Remember, this offer is only good till this coming Wednesday night when the workshop takes place live with Tom O'Brien and Dave White, so don't delay. For all the details, visit the front page of TFNN.com.
Who says you can't take it with you? TFNN says you can. With your mobile device and TFNN's live radio streams, TFNN has put it all in the palm of your hands. No special apps to download. No subscription fees for live radio or Tiger TV streams. We say you can.
Now let's go over to the dollar, because the dollar is going to be the generator. It is the generator of basically higher dollar, lower market. And what the dollar has done, and this whole uptrend, folks, has just gone sideways. The way it works, folks, is this.
We say you can. The Tiger Financial News Network. Smart investors and professional traders know you can. TFNN.com. Educating investors. Investors, Taz Market Research delivers to its subscribers expert commentary on the analysis of 15 different markets each day. Get this invaluable and timely information through the daily market research videos Taz Market Research produces each day before 9 a.m. The video analysis will include reports on currencies, interest rates, indices, metals, energies, grains, and more. You'll be able to gauge where high profitability setups are in each of the markets. Receive a free 2-week trial subscription to Taz Market Research videos on the front page of TFNN.com. Basil takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Hi, folks. Basil Chapman, Tiger Technicians Hour. Oh, now I can see what the problem was. Oh, okay. Sorry, Al. I had I think I have an internet problem on one of the monitors, etc. So we're okay. Yes, a question about the IBB, the iShares Nasdaq Biotechnology. Is this a bubble? Well, basically what's happened is that the IBB is trading at 205.47. It made a high just recently of 213.78. If you look at this monthly chart, the monthly chart is at a very steady incline. And as far as the incline is concerned, there is nothing here in the price, because the month hasn't finished, or in the upper technicals that suggests that there's anything. But if you go down deeper and you look at this particular, the lower, where these particular technicals are, if you're looking at Tiger TV, yeah, with the stochastic, the MACD, the unbalanced volume, etc., relative strength, I'm starting to see signs, excuse me, that say, be careful. It's starting to really run out of energy. And the weekly chart says tremendous move to the upside, held one of the channel lines. That's good, but there's a very good chance that somewhere between 207 to 212, without getting to 213.78, we could start to see a failure. And that's just the way I'm treating it. Now, can it fail at any point? I think it's really close to failing, but we'll treat this as one of those potential shorts that you can keep trying for. We had two successful moves to the downside. This one didn't succeed, but that's okay. I mean, well, it's still to the downside, but it hasn't made a new recovery high. So all I can say is that I'm looking at sectors that are starting to show weakness and sectors that are starting to show relative strength and some internal strength. Now, let's just go through a couple of things. What I wanted to show here, I wanted to show a couple of things that I looked at last night. If you're looking at wheat, for instance, this is the December wheat. Now, I don't know which contract or whatever it is. I'm looking at December. Based on the Chapman wave methodology, this is a peak F. That long-legged doji, they got retested. That's what long-legged dojis do. That's broken down, and now it's under the 9-period exponential moving average. The weekly is really improving a lot, and it says at 682, down 3 3/4. That 673 9-period exponential moving average is going to become really, really critical. So that's that. If I'm looking at natural gas, and I always get calls on natural gas, and you're looking at the December contract, this is still, it's amazing how that 200-period exponential moving average in the 200-period moving average in the daily chart with a high of $4 for 3 sessions in a row stopped right at the 399, I think it is, or 398 level of the 200-period exponential moving average. And last time it hit it exactly at 4.041 and got repelled at peak F. This time we're only at C. It should go higher. But there's something very interesting. The continuous contract of natural gas is in fact saying I'm in leg D, still just over the 200-period exponential moving average. But most importantly, look at the weekly chart. Any move above, doesn't have to be a close, any move above 3.887 starts leg C. In the NGZ contract, any move above 4.041 starts leg C. Very nice. Now, if you're looking at the crude oil using the December, maybe I don't know which contract different people use around here. So I'm just looking at this, and it says if this was on the upside, I would have put this rectangle. Let me just move this particular rectangle. I would have moved it down here and said, hey, I'm seeing a rectangle formation. And what happens with this rectangle formation, it'll keep testing. There could be an A to B to C, even a D to or just above, or in this case, just below the 100.64 level, the low of the 30th. And then there should be a pretty decent rally. Not only that, there's a pattern that I love to look at, and that is the H formation that can, in fact, break out to the upside, especially if it doesn't retest or break the previous low. Let's call it around about the 100 area, 100.20 or 60. If, in fact, there's a move to the upside above 103.88, that's going to be very positive. So that's going to be very positive. On the other hand, when you're looking at the weekly chart, it's saying, uh-oh, look at this. There's a failure. The 9-period exponential moving average has become resistance. If crude oil breaks under 100, goes to 99, that's going to suggest that the next major support is 99.65, the low of the week of the 9th of August, and then be careful. So I'll be back straight off these messages. Dow's up 134, S&P's up 20.
Andy Hecht, the host of the Commodities Hour, recently launched his newsletter service, the Technomental Commodity Report, and only 6 weeks in, Andy has already recorded a triple-digit winner. Andy advised his subscribers to purchase a long-term call option at 46 cents on July 11th, and then sent out a special update Friday, August 16th, advising his subscribers to close that position at $1.40. That's a 204% profit in just 5 weeks. The Technomental Commodity Report by Andy Hecht is released each Thursday morning, and right now you can get a month-long free trial to this subscription while locking in the low introductory rate of only $39 a month. Andy Hecht has been a commodities trader for over 3 decades. Let his experience work for you. Sign up for your month-long free trial to the Technomental Commodity Report today at TFNN.com.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
This segment is brought to you by Harmony Gold. For more information, just click the Harmony Gold banner on the front page of TFNN.com.
Hi, everyone. Basil Chapman, Tiger Technicians Hour. I just almost forgot to do something over here. Move that away. Oops, what happened? I lost it. There it is. Okay, I just want to check if there were any emails. A couple of things that I wanted to talk about. Question in the den about DSW. I discussed this. We had a caller from New York. We were looking at DSW. I said everything about it says to me that it's getting real close to some kind of a top. It is, I believe it's a shoe company, or at least that's the DSW that's at the malls, etc. Really nice products they have. And as far as I'm concerned, you just got to look at the chart and say, okay, what's the chart telling us? And as far as I'm concerned, that's how I want to go through every single sector, every single group. I mean, the big question now is, hey, with the UVXY, the 200% short, 200% short, the volatility index, is that long or short? Up, 200% long. Is this not the time here, right down at the 3145 level? Because how much more good news could there be? Well, if you look at risk reward, you have to say to yourself, yes, this is a perfect time, but it moves so quickly. But however, if you put a one-point stop and you're able, it's not overnight and you're able to do that, this is probably a time to say, if everything goes wrong, this is your insurance. But the charts are saying that we want to move higher. At the same time, some of the charts are saying we want to move lower. We've had our move to the upside, and DSW trading at 81.23 down 2.77 made a peak E-top a while back, And I can't remember, this is when I discussed it in my opening call, but I had it there as a stock we were looking at for the short side, 88.73 on the 27th of August, never did anything. And now look what's happened. It's plunged from that level to the 81. I say plunge is 7, it's not even 10% yet. It's close to 10%. But the most important thing about it is it's saying that the weekly chart is about to break down for the very first time. 9-period moving average in the weekly chart, boom, right down to the underneath it at this point. The week's not over. Saying at this particular moment right now at 11:37 or whatever it is on October the 16th a.m. Eastern time. However, this is not the issue. The daily is the rudder, and the rudder changes the course. And the momentum, the amount of power and energy and surge that you've seen up until then tells you how long sometimes it takes for the rudder to actually kick in and for the turn to be taken like a super tanker. Well, this says that there's a possible turn. I would say the sell signal to sell mode in the daily is complete. That's in place. That doesn't say you can't turn around and rally. I'm just saying that technically it's gone to the sell mode level. There's probably a sell signal coming up in the weekly chart, which confirms the sell mode in the daily. The monthly chart hasn't even acknowledged in the technicals because the monthly isn't finished yet, whether or not this is going to be peak E confirmed, and 76.29 will be the tremendous support. Question of the day is maybe it could have enough strength to rally one more time. Yeah, maybe. I just don't know because everything here is weakening and it's taken time to weaken. So I'm getting confirmation of the daily. I think I'll get on Friday at 4 o'clock, I'll get confirmation of the weekly. If there's a close anywhere below, I'd say 82.11. It's at 81.22 right now. Preferably at 79.50 or 79 something or lower. Now, here's the other thing, the monthly chart. Look at this, all-time highs. Amazing. But it's the first sign of vulnerability, and that's all I can say about the monthly. Can this become a hat-trick top? There are many signs that say there are certain stocks, certain sectors that have the potential to have their monthly charts peak in such a way that the daily gives a sell signal to sell mode, the weekly then gives a sell signal to sell mode, and then the monthly slowly confirms that there's a sell signal, and then what you need is to have the technicals go below 80% in the stochastic, the MACD needs to turn down negatively, and the price needs to both cut underneath a 9-period moving average, and most importantly in this case it would be the up channel support line, and that comes in around about 70. So that's at 11 points to go. So that's a long way. So I can't talk about the monthly. I'm just saying, yes, this looks highly vulnerable. Now, there are a couple of other stocks. Now, let me look at my list for a change. I'm actually looking down. Yes, I wanted to look at WOD. Remember I spoke about this, and I said a couple of things need to happen here. If the iShares of the Global Timber and Forestry ETF are to break down, I've only got a peak C in the daily. I don't know how it can make a leg D, but it actually did today. Leg D above the 51.47 level. That was the high back in September. So today it's gone to 51.62. That creates leg C. There's no other way. I suppose I could call it F/C because it hasn't broken under the previous low. But everything there looks like this is C, and that's really a very good sign. And in the weekly chart, the monthly chart, we've got the left side, right side price time match, which says that the previous all-time high, this ETF has only been around since 2008, June, and the previous high of September of 55.50, retested unsuccessfully at 52.97 back in February of 2011, we're coming close to it in a left side, right side price time match, which is now 1, 2, 3 bars late. So that's not to say it's negative. This is just that was the objective and the time objective. But in fact, it hasn't been able to get there. Now, here's another thing that I find really fascinating. At the same time as this wood ETF is rallying, we've got the dollar HGX, the housing sector, not doing very much at all, just kind of stuck And that tells me that certain things are going on both in the interest rate sector as well as in the besides the interest rate sector, but just generally in housing, that says there's a stalling right here. You've had a very sharp move in the Philadelphia housing sector index from the 73.65 low of October of 2011 all the way to the 210.01 high. Let me double check. Yep, 210.01 high back in May of this year. So it's consolidating. So it needed to go through a couple of those things. Here's the other thing. I wanted to go through this chart. I wanted to do it weeks ago, and I never did. If you look at this chart, you would say to yourself, I'm not going to tell you what it is. I'm just going to show it to you. If you're looking at Tiger TV, that's fine. If you went to this particular low right over here at 40.56 back in July of 1929, I'm telling you now when it is, and you looked at it through all the iterations of the depression, and then the depression seems to be over. And then what do you get? You can't believe it. You get the drought. You get those tumbleweeds. It is a terrible thing. Well, if you look at that, look all the way through to a 381% gain, $40 to $195. I mean, back to March of 1937. And we have a very similar situation here that we're going up and up and up. Terrible news. Let's go to George in New York. Hi, George. How are you?
Basil, good morning. How have you been?
Good morning. Good to hear from you.
Yeah, thank you. Thank you. And good to hear your voice as well.
Thank you.
Today I'm looking at PBR.
Okay. So let me just do a quick notation here. PBR is, in fact, Petrolia Brasileiro SA ADS trading at $15.65, down 4 cents. Tell me about it.
Okay, I've just been looking actually at the chart. Earnings are pretty decent on the company. And, you know, I was listening to you the other night talking about U.S. Steel, and, you know, I started to check around the commodities area.
Yep.
And I'm looking at the growth globally between Europe and in the Asia-Pacific realm. And, you know, I think really that the commodities and related energy stocks are going to start turning the corner soon to go up. So yeah, I like the earnings on Petrobras, and I just thought it was good. And I was looking at the weekly chart, and I see a lot of volume going into it.
There are a couple of things that are going on. While you're busy talking, I am, in fact, of course, notating. So I'm just finished the daily chart. You're the second person to introduce me to stock in the energy sector today. And the previous one, I was looking at the chart that was mentioned, and I said, you know what? And this was more heating oil in terms of winter coming up, etc. Mm-hmm. And I thought, you know, that it's a very good observation. I want to do just one quick thing here. This is an A. That's a B. That's a C. That would have to be a D and an E and an F. And I need to see, yeah, I guess there's no other way to count it. All right, it's a little bit of a weird count. No, it's not the count that's weird. It's gone to a peak B right at the 200-period moving average back in mid-September. Now it's consolidated. Okay, I think I know what I can do now. Excuse me. I know that you look at stocks, you do your homework, and then you're able to place this beginning trade, and then you're able to see how it reacts with the general market, with its compatriots in the different sectors that it's related to. And then you start to either increase or you don't increase according to how it's acting. And that, I think, is
you know
perfect
me well.
For this.
Thank you.
I think that's perfect for this particular stock. PBR is now. Are they a supply? Are they like mobile?
Yes.
What is it?
Yes, they're more integrated.
They're integrated. Okay.
It's a state-owned company.
Yeah. Now, being a state-owned company, it does say that you got to be somewhat cautious, obviously. Is this Argentine?
Brazilian.
It's Brazil. Okay. You've got to be somewhat cautious. And because of that, my suggestion is twofold. One is the entry point around about this area says it's a beginning of it because it's trying to make a cup formation. I would have preferred, as we were speaking, that instead of being at 1565, it was closer to the day's high of 1589, because that would confirm for me that there is a turnaround. And at this particular point, if it flattens out, it could make an H pattern that goes to a W, and it could do a bit of, and I know that you don't mind this, that if it's even a point lower and you still feel strongly about it, that's not a big deal because it's a starter position. So I'm going to suggest that you've got a really interesting stock because it's the weekly, not the monthly, which is just horrible. I mean, this is one of the worst monthly charts I've seen because it could never, ever cross the 9-period exponential moving average. So because of that, the weekly chart is saying 1529 is really good support. It hasn't broken the 9-period moving average throughout this entire month of October and middle of September, since it broke out the week of the 6th of September. Everything about it, the stochastic and the MACD, suggests that it wants to go above 1667, which would start leg D. So here's my suggestion. You got your starter position. I would prefer to add, I think this is what you like to do as well, I'd prefer to add on strength above 1595 as another small position. If you accumulate this in small positions, what will happen is that at some point, if it's going to do it at all, at some point in October or November, suddenly that monthly is going to improve because for the first time you've got the MACD, which is turning up and crossing up. You've got the stochastic at 16%. If it can get to 21% at the end of October, beginning of November, with the price above 1680, which sounds like a lot because it's 3 points high. That's a big percentage move. But 1645 is the 200-period moving average, which it tried to hit once before. It touched it and then pulled back. It's in play, that 200-period moving average. So those are the upside targets. I suspect it's going to be in slow moves. And then suddenly, if it gets to the 1610, 1620 area, it's going to suddenly have a big pop. That's the pop that says, I'm trying for that 200-period moving average again. And if it fails to get above 1592, 1605 by Tuesday or Wednesday of next week, it says you're going to have to wait a little bit longer. I'm still waiting for that weekly to maybe test 1529. That's what it's saying to you. But if it refuses to go to 1529, if it moves higher, that's a really good sign. And that's a really nice way of telling the stock, you prove yourself, I'll reward you. Actually, what's happening is it rewards you as it proves itself. But that's the thinking.
Great idea.
I like it. I'm going to put it on my list here as a watch stock. It just hasn't met all the criteria that I'm looking at. As a buy and hold, yes, but not as a... I like stocks that as we get them, they start to move. And this looks like I need a little bit more evidence, but I'm liking it based on the weekly chart so far.
You know, it's interesting. It does trade under book value, too. So if the book value on this is about $26.35. So it's trading under book. Your earnings are going to be $2.10 for this year alone. So it's trading under a 10 PE.
When's the next reporting date?
That I'm not sure of, Basil.
Are you ready to ride the next bull market wave? Catch the Chapman Wave. Using the Chapman Wave methodology, Basil's very comprehensive daily newsletter, The Opening Call, gives the short, intermediate, long-term analysis for the key indexes. In his Trader's Corner, he gives a brief market summary and expectation for the day with possible trades, both long and short, which are reviewed daily. A position subscribers sold recently for a 42% on part, plus a 64% on rest, at Hertz Global as a core position for 6 months before exiting the position. A current position, entered as a turnaround company with good technicals based on Basil's waveform, is trading up to 170% of its entry point as a portion sold earlier for a 21% gain. Subscribers to The Opening Call can see the Chapman Wave techniques demonstrated and explained daily to educate investors. To get your 2-week free trial to The Opening Call, just visit the front page of TFNN. TFNN.com. Also, don't miss Basil's program, The Tiger Technicians Hour, Monday through Friday at 11 a.m. Eastern on TFNN.
TFNN has just announced a special sale for 2 weeks only for the Gold Report. To celebrate the 600th weekly issue of Tom O'Brien's Gold Report being published on October 22nd, TFNN is having a special one-time sale. From now until October 22nd only, you can receive 60 weeks of the Gold Report. That's 14 months for only $600. We're offering Tom O'Brien's dynamic weekly newsletter at only $10 a week, which is almost half off the regular monthly price. The Gold Report is published every Tuesday and provides subscribers with Tom O'Brien's expert commentary on the industry, as well as detailed information on a variety of mining equities. Take advantage of this one-time special offer and pay only $600 for 60 weeks of the Gold Report. This offer is valid for current or new subscribers. Everyone is welcome to take part in this special promotion as we celebrate the 600th weekly issue of the Gold Report. All the details are on the front page of TFNN.com. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
What's the one thing that pulls people back from the breakthrough that they're moving towards? What's the only thing that really stops people from taking action? You and I both know the answer, and sure, we can come up with the reasons why we're not where we want to be, but the only reason that we don't do more with our life is fear. Or if you're an overachiever, call it stress. Simply put, there's something that happened to us in our past that's holding us back from the life we deserve, yet you and I are okay, we're here. So why should we let our past control our future? Exactly. We shouldn't. Hi, I'm Steve Rhodes with TFNN.com, and when it comes to your trading and investing, I can help you overcome your fear of loss. Together, we'll turn weakness into strength with a system I've developed called Mastering Probability. I'll teach you how to make your money work harder for you than you do for it. I'll teach you the tools that provide financial freedom. Go to the homepage of TFNN.com, click on my name, Steve Rhodes, and begin your journey of mastering probability risk-free. It's time to become a pioneer of your future versus a prisoner of your past.
This segment is brought to you by BackTech Environmental. For more information, just click the BackTech banner on the front page of TFNN.com.
Hi, folks. We're back. Hi, George. You still with us? George, you there?
Yes, I'm here, Basil.
Yeah. George, I'm looking at one of your favorites from before. I don't know if you still have it. OKE, One Oak.
Okay. No, I never had that, Basil.
You didn't have it, but what was, there was another one that we were looking at. I saw it the other day, and I can't remember the symbol.
Maybe INFY, INFY, emphasis?
No, that wasn't that. It wasn't that. It was in the infrastructure business.
I'm sorry?
In the infrastructure business.
Infrastructure.
In the Midwest.
Oh, that's Manitowoc, MTW.
That's what, MWF? Wait, what?
No, MTW.
MPW?
MT as in Tom, W.
Of course, that's exactly it. MTW. So, and this one had a really nice move, made a peak E in the monthly, Manitowoc company, trading at 18.64, and then it just started to roll over. And this is a very interesting one because I was looking at it as it started to roll over, and I didn't know what letter to put there. I remember this well, and then I put in a G/A, and this is one of those times where you have to wait for the technicals to tell you. Then the technicals broke down, and there's a Roman candle from last week At 18.12 was the low. It's trading at 18.65. I'm not sure if you still have that one, but
yes, I do.
You do. You know, this is what is they were infrastructure in a certain way, right?
Yeah, let me tell you, what they do is they make industrial cranes for the skyscrapers, the buildings, construction, as well as a food service division. The food service division is a commercial division which supplies the fast food restaurants.
Okay, so you know what I want to do?
Soda machines, ice machines, ovens.
Yep. You know what I'm going to do? I want to do a little work on this because I wanted to see if it's starting to find some kind of support. It's one that's just on my list as a watch stock, that's all. And I thought I'd bring it up, and I completely forgot what the symbol was, and you just reminded me. So we're about to wrap up, so I always appreciate...
There's one more thing I want to bring to your attention, Basil, quickly, is take a look at SUNE, Sun Edison.
I will. Okay, I'll do a little work on that, and we'll talk about it tomorrow. Hey, it looks good. I'll be right back to that. Thank you. Thanks for calling, George.
Basil, be well. Thanks for your help.
Thank you. So, folks, in the remaining minute or so that we've got, let me just do this here. I want to do this real quickly. As far as I'm concerned, the issue has been price movement, and I wanted to show that Dow chart. I'm not going to show it again. But if the price moves higher, regardless of the noise, that noise that's in the background, we've got to be able to isolate ourselves from it. But there is a chance that something weird is going to happen. But looking at the chart, it says, hey, this is just a lovely leg B. Dow's up 191. Where would it fail? It would fail if at any point by Friday at 4 o'clock, the Dow closes under, at this particular point, under 15,000. I don't think that's going to happen. I'd even say under 15,170. Right there, 173 is the 9-period moving average. But more importantly, I want to make a fuss about this, that volatility index. At any point, if there's a sustained move and the volatility index gets to the 19s or higher, this market will come back down. If it remains under 16 in this 1543 or lower area, that's buying pressure. Just keep it as simple as you can. There are stocks that we love today, that I love today, and there are stocks that are not looking that great. And just one quick question here. Okay, just let me see, and I'm going to find out here. Quick question. I don't believe Larry is here. You know what? I can see if it's possible to, I don't know. I'll see what's going on in the next few minutes to see if it's possible. Maybe I can work it out. So, thanks for being here. I'll be back tomorrow.
Patterns, profits, and peace of mind.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's trading newsletter.
Patterns, profits, and peace of mind.
In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the forex market, and more. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 full weeks. That's an $85 value. Yours free when you register right now.
Get Larry's Patterns, Profits, and Peace of Mind.
And get the edge you've been looking for.